Right. Good morning, guys. Sorry, it is Saturday morning, and this is about take 4 of this video because I keep getting distracted by price action and candlestick analysis off topic. And the whole point of this video is to show you, in response to Co's message on YouTube about how I get so little drawdown and precise entries, and it's all because of the way we enter trades using higher time frame reversals, trend reversals, and then as a sort of trigger. So like in this instance, we're on the daily chart at the moment, but I was describing an H4 reversal, and I'll explain why I got distracted and had to make take 4 of this. We've actually had a daily reversal to the downside here, which is, you know, they are rare, and whilst this looks like it's an uptrend, the predominant trend is down. This is just a pullback against that downtrend. This is the supply area, the demand area rather, that failed to hold when price went down here, and really we're just on a second test of this old support or demand as new supply or resistance. So this does look bearish, yet I'm not talking about this at all in this video, so I apologize for that. I've gone off topic. The topic was how can we get into trades with the minimum amount of drawdown, and it is based on, you know, the reversals and then the internal reversals. So I'm going to talk about this H4 reversal here. Low, high, high, low, high, 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 low, lower, high, lower, low, break and close, and that's the pullback to test old demand to see whether there is still new demand there. And if it fails, well, what do we know will happen? Supply comes into the market because there are no buyers left. They've turned to sellers, and the price goes down. So in our imaginary sort of market profile analogy that I use is gold. If gold gets up to the 2000 mark here, and you know, it pokes up, some of the buyers get in late in the day or whatever and buy, and then it reverses, which it's done. Sellers pile in at this, whatever this level might be, 2200 say, and then they come back to test to see whether there's any more buyers at the 2000 level. They find a few, and then all of a sudden they turn into sellers too, or they get stopped out or whatever, and then price crashes. So rather than talk about support and resistance, talk about demand and supply, because it really, you know, that making that transition for me in my head made sense, a lot more sense than just this arbitrary support resistance saying. Anyway, getting back into this move, so we've basically trended down, high, low, lower, high, lower, low. We've closed. We've pulled back to test whether there's any more demand in the market. There isn't. So now we're already entering when the higher time frame has done all the searching for us, and all we do is watch the lower time frame, the H1 in this instance, to see whether it reverses. That's why this is so nice. I've just explained sort of the mechanics and what drives the market. All we have to worry about is our reversals. So we've had an H4 reversal down, and now you can see the swing trend. High, low, lower high, lower low, pullback, continuation. Swing 1, 2, 3, 4, 5. And if I put the H4 level on there, let's get rid of this daily level, because, and that's why I was talking about targets, and all of a sudden I've gone to the daily and got totally distracted with this, so I apologise about that. Try not to do it, but that is worth much more analysis for a potential trade for next week. So watch that one, guys, next week. Anyway, back to this H4. Let's get rid of that level there. There's our H4 reversal low, the penultimate candle high, and you can see how it's been used as resistance to the pip. Well, the flip zone, if you like, has pushed up, pushed down, pushed up, pushed down. They just couldn't break through that support. It held as resistance, or demand and supply. So H1, so we go back to that. Well, in fact, we ought to have been on the new candle. I do apologise. Always go on the new candle. Watch the pullback. The H1 has failed to pull back. There's the high, low, lower, high, lower, low. But it's gone back and tested these levels, as I said to you. That's where it's likely to go to. And that's where it almost made it to. Okay? But don't use those as targets. Just if you're going to go trade these pullbacks on these higher time frames, massive H4 candle, remember too. That was a perfectly good trade on a lower time frame. Then we need to check the lower one, the M30, to see what that's done. Because if that reverses, does a valid reversal on M30, we've got to have a valid reversal down. And it did. There's the penultimate low. These are they failed to make lower lows, so we always take that one. High, low, lower, high, lower, low. That's the break and close there. Low, high, high, low, high, high. It failed to make a new low here, so this stays the valid penultimate. That's the close up. So now we need to go to the opposite direction. Once this failed to make a new high, and we have low, high, high, low, high, high. So the rules state that we wait for a break and close below there, which it has done. Then once again we watch the pullback. It failed to close up on the 30-minute. I'll double check that. We'll take the open because it's hard to get the lines. Oh, right, okay. Close 933, high 934. So it did fail. Check the open always as well. Open 934. Wow. So that would have been treated as a break, actually, a reversal to the long side, because it did gap up by that pip. That makes if it equals the high or breaks the high, it's considered to be a reversal. But not to worry, because we got the perfect reversal to the downside here. If this hadn't reversed up on the M30, then we would have double checked the M15 and waited for the M15 to reverse to the downside. M15 obviously was up, and then the M15 needed to reverse to the downside. Low, high, high, low, high, high. That's the reversal there. That's the pullback on the M15, which we would check the M5, but we didn't have to do that. I was just explaining a different scenario. If this 30 hadn't closed up, then it's obvious the M15 would have done in this instance, so we check that too. So with the M30 now, we just need to check for the reversal to the downside, which is here. Oh, I do apologise, my line didn't move. I really apologise, I'm not going to make this video again, so we're back over here. Sorry guys. That was the M30 reversal to the long side. The M15 will be different now. I thought something was odd about that swap over. So that's the M15. It did reverse long here. The M15, it would have reversed here to the short side, then reversed back on against us again until it finally went and reversed on the 30. But had it not, we still wouldn't have been faked into the short trade here, because we never got we had the 15 reversal but then the pullback. Okay, so here was the 15 reversal to the downside. You even got the pullback up and remember we're assuming this 30 didn't reverse to the upside, that would have been in the entry, and that's why the stops are so tiny. The whole lot from the H4 to the M15 and even the M5 were totally exhausted. That's what this is all about, and I don't make that clear enough, often enough. All it looks like is it's a arbitrary 3 candle reversal. What the hell is that used to anyone? It's not. It's about the Russian doll or ducks in a row. We've taken every reversal and allowed it to exhaust itself to the upside, right from the H4 exhaustion, the H1 exhaustion, the M30 exhaustion, the M15 exhaustion, and then we would look at this on the M5 and M1. As it is, because that M30 did break up, we had to wait for the breakdown, so it would have been this candle there, high, low, lower high, lower low, lower high, lower low, and close. And then we look at the M15 here. That's the new candle, that's right, the green is in the right position, and the M15 failed to close back upwards, but the M5 looks like it would have done. I know it's laborious, guys, but that's what this is. That's the beauty of this stuff. It forces patience and discipline. But often you'll come into an H4 reversal because you just got up and it happened in the middle of the night, and all of this would have been done for you. And that's why sometimes you can hit a trade with 5 or 10 minutes eyeballing. And that's what happens when you get used to what's going on in the charts. You know, you can look at a daily and see a reversal downside. You can see the H4s happened, you can see the H1s happen, you can see everything else happened, and you happen to be on the 15-minute chart and you can hit it virtually. Okay, now my mouse is playing up again on me. There. So the M5 reversed, low, high, higher, low, higher, high, higher, low, higher, high, but it didn't break and close. I hope this video isn't too long, and I hope it saves itself. That's the test. Look, it came up, there's the reversal candle, high, low, lower, high, lower, low. That's the test. It failed to reverse. So really and truthfully, this is where the histo alert comes into its own, because, you know, watching the M1 is painful. Just wait for a decent signal on the histo, and that could be your entry there. Beautiful. But that would also be on the M1 as a confirmation to the downside. Something over here confirmed. It failed. Doesn't look like it's broken that. It's pulled back. It's finally broken down. But look, there's no momentum. So use the histo alert. It comes in handy. Okay. So that's it. You've exhausted all the buyers in this particular market. That's why your stops are so tight. And you know, don't worry too much about missing the trade, because you're entering this whole move here, at least down to this resistance, because we know by watching these things now and by focusing on them, because you've been watching my videos, some of you now, for ages and ages and ages, that is likely to be the test point for this push to the downside. Don't think it's tested yet. And also, you've come into a daily reversal, so you know the obvious area for that to have tested to the downside that would be a target is that potential reversal. Whoops, where's it gone? That reversal there. So and if it's broken that daily line, then it's on its way to these resistance levels here and here. You know, we talk about this all the time, but I've gone slightly off topic now. I'm talking about how you get your ducks in a row, and that's it. I've just shown you a perfect example. You can, you know, you've got all the history on your charts, guys. You can look at these to your heart's content. And sorry, lost myself there now. Excuse me. And that's the answer to Co's statement. How do I get into trades with so little drawdown? It's because I've used every time frame to enter the trade, and as such every time frame above you has exhausted its supply and demand levels. There's just no more buyers in the market at that point, hence tight stops. Hopefully that's been worthwhile. Thanks for watching and have a great Saturday.